European stock markets are bracing for a downturn after Federal Reserve Chair Jerome Powell warned that equities are currently fairly highly valued. This cautionary statement has sparked concern among investors, signaling potential turbulence ahead. But here's where it gets controversial. Powell's remarks challenge the optimistic outlook many traders have held, raising questions about whether the market's current highs are sustainable. As a result, European shares are expected to open lower on Wednesday. According to IG, London's FTSE 100 is forecasted to dip by about 0.2%, while Germany's DAX and France's CAC 40 are anticipated to fall by roughly 0.3% and 0.4% respectively. These modest declines reflect a cautious mood as traders digest the implications of Powell's comments. Looking beyond Europe, Asian markets also experienced a broad pullback overnight, with major indices retreating amid the global unease. Meanwhile, U.S. stock futures remained relatively flat in the early hours of Wednesday, suggesting that American investors are taking a wait-and-see approach. Powell's statement came during a press conference on Tuesday, where he highlighted that asset prices, including stocks, appear to be trading at elevated levels. By many measures, for example, equity prices are fairly highly valued, he said when asked about the Federal Reserve's stance on market valuations. This admission is significant because it hints at the central bank's growing concern over potential market overheating, which could influence future monetary policy decisions. In a separate but equally impactful development, U.S. President Donald Trump made a surprising shift in his position on the conflict in Ukraine. On Tuesday, he expressed optimism that Ukraine could reclaim all of its territory currently held by Russia. "I think Ukraine, with the support of the European Union, is in a position to fight and win all of Ukraine back in its original form," Trump stated in a post on his Truth Social platform. He further emphasized that with time, patience, and the financial support of Europe and, in particular, NATO, restoring Ukraine's original borders is a realistic goal. This marks a notable change from previous statements and could have significant geopolitical and market implications. Trump's comments came on the same day he met with Ukrainian President Volodymyr Zelensky at the United Nations General Assembly in New York. During their meeting, Trump also voiced support for NATO members taking decisive action, including shooting down any Russian aircraft that violate their airspace. Back in Europe, investors are keeping a close eye on upcoming economic data releases that could influence market sentiment.
Germany's Ifo Business Climate Index, a key indicator of business confidence, is scheduled for release later Wednesday morning. Additionally, the Swiss Economic Sentiment Index for September will be published during the trading session. These reports will provide fresh insights into the health of the European economy amid ongoing global uncertainties. This evolving mix of central bank caution, geopolitical shifts, and economic data creates a complex backdrop for investors. Are markets truly overvalued, or is this just a temporary pause before further gains? And how might the changing dynamics in Ukraine affect global financial stability? These are questions worth pondering, and we'd love to hear your thoughts. Do you agree with Powell's assessment, or do you believe the markets have more room to run? Share your perspective in the comments below.